JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 17th of August 2021. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, the usual, let's quickly have a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website. And if you click here on the top, it'll take you to our page, which we also update on a daily basis. So yep, check us out here on jfdbank.com. And yep, click on the research tab right there on the top, guys. So now then, quick update on what's happening here with Nikkei. So the markets in Asia are declining. Certainly the worries around the whole there we go. So the worries around the whole kind of corona issue, and of course the escalating Afghan situation. So yesterday we talked about this in the morning video, if you remember. Yep, what I said, that if this continues to escalate somehow, then yes, we might see maybe the markets reacting a little bit. However, again, let's see how that situation will unfold further. But yeah, at the moment, I mean, the problem here is, of course, the Asian markets are reacting to that, and we're seeing a bit of a decline here. So you can see Nikkei drifting lower and coming closer to that key support zone near that 27,385 territory right there. And yep, it still provides decent support, that level. So we need to see a nice good clear break below it in order to consider further declines. So let's keep an eye on this one, and let's see how that's going to play out further. Shanghai Composite had a bigger decline here. As you can see, it fell back below the upside line, back below the 3,470 territory, and yep, this kind of potentially could open the door towards further declines. The index is still open. The market is still trading, so we still have around 50 minutes left of trading. You can see that we found support near the 200-day EMA, and now let's see what's going to happen further. And for now, I would say that if we continue to slide and we fall below the 200-day EMA, then yes, lower levels could be met here, and we could initially aim for that 3,417 territory, or the next target could be around here near the 3,367-68 territory, marked by the low of the, well, actually the current lowest point of August. So, and then we'll take it from there. So for now, yes, the fact that we stayed below this and currently still are staying below this 3,470 territory, yes, of course, that gives a bit of hope here for the sellers. But just for that extra precaution, a nice good fall below the 200-day EMA here, shown as the black line, could do the trick for more sellers. I can see in chat room here, Evu and Erica, good morning to you too. I hope you're having a wonderful start of the morning of Tuesday. Yep, and I hope everybody else is also having a wonderful start of Tuesday. So we have a busy day ahead of us. Coming back to the markets here, the German index DAX did push lower initially. You can see that it formed that little island reversal that I talked about yesterday. However, it drifted lower and then found support near this upside line taken from the low of the 19th of July. So if we take a look at the cash index right now, we'll see that the price is drifting back down, and most importantly, it's currently trading at around 15,880 zone, which means that we are somewhere near this upside line again. And basically for now, let's see if this upside line gets broken or not. If it will, then, well, I mean, further declines are possible. And another thing, let's just bear with me one moment. Let me just quickly have a look at what was the low here yesterday, and that was roughly around the 15,851 zone. So, which means that basically if we fall below this hurdle, then this could open the door towards the 21-day EMA at least, and then we'll take it from there. So far, looking at the cash index, it seems that we are on track to testing that yesterday's low. If we break and stay below it, then certainly, yes, lower levels could be met, guys. For the upside, what I would need to see here is basically a push above yesterday's high, which is roughly around the 15,961 zone. And yep, if it climbs above that area, then we could start aiming for that all-time high again, or even higher levels. But at the moment, guys, I would say be very careful here. I mean, let's see if the European markets will follow the Asian markets today and also decline. But again, like I said, just for that extra confirmation, a break below this 15,851 territory would be needed. Dow Jones Industrial Average. Now, initially it was reacting to the whole kind of situation around the around Afghanistan, but yep, we saw the initial decline, but then everything stabilized, and the markets in the US market did recover, and most importantly, it went for a new all-time high. So this is what I keep saying to you guys, that even though, I mean, we look quite overstretched to the upside, we look quite overbought, still there is a possibility for this one. There is still kind of good opportunity for this one to continue moving higher, especially if it continues to, let's say, slowly kind of overcome the previous all-time highs. And for example, here right now, the previous all-time high was at around 35,610 zone. We managed to overshoot that by just a little bit, of course, but nevertheless, we still created a new all-time high. So what I'm going to look at right now is, of course, I'm going to keep an eye on yesterday's low near the 35,232 zone. If we clear that and we drop below it, then yes, I'll go for a larger correction to the downside. For now, looking at the cash index, yes, we are seeing a bit of a decline, a move back below the 35,500 level, so we're back below it. And yep, for now, guys, like I said, let's see where this is going to end up being today. Again, as long as it's going to stay in this little area here in between these two levels, I'm going to take a neutral stand on this one, because it's going to be way too close here and way too unpredictable. So if it pops above the 35,611 territory again, then yes, I'll aim for the upside. I'm initially aiming for that all-time high near the 35,631. But if it starts falling below yesterday's low near the 35,232, then, well, I will consider a bit of a correction here, a larger correction to the downside. The S&P 500 also made a new historic high, managed to overcome the previous all-time high near the 4,468 territory. It reached the area near the 4,480. If we take a look at the cash index right now, we'll see that the price is also drifting back down. So we're currently sitting at around 4,464 territories. So that means we're back below the previous all-time high. So again, that of course raises a few concerns here. Of course, like I said, also, as we talked yesterday in regards to that, the whole Afghan situation, if that continues to escalate significantly and somehow drastically, then yeah, I mean, that could have its negative effect on the market. But again, at the moment, I'm looking at if it does have a negative effect, then this could only be short term, unless something happens, and because currently still everything revolves around Corona, around the whole kind of lockdown issues across the globe. So yeah, that's what we're keeping an eye on for now. Like I said, let's see, because businesses still operate. That kind of keeps on boosting the market. And again, if somehow, let's say, this is another thing to consider. Basically, if you're, let's say, if you're liking stocks, for example, then keep your eyes on some of the major military companies, which kind of let's say provide military equipment and can create and produce military equipment for the U.S. government. Companies like Lockheed Martin. So Boeing could come in there as well, partially. So again, keep your eyes on those as well. That's, like I said, that's where it's going to be, could be interesting, because, well, as we know, whenever you have a crisis, or let's say some sort of a economic downturn, at least, then, well, it's always in history it was war that kind of helped come out, or let's say helped boost the domestic economy. So yeah, that has been happening across history. So guys, I mean, that's nothing new. But anyway, like I said, yeah, let's keep an eye on this one. Let's see how this is going to play out. And yep, for now, like I said, the fact that it's back below the 4,468 territory, that creates a bit of a kind of an issue here with the upside. Maybe a bit of a correction here to the downside could be possible. DXY, the dollar index, pushing a little bit further up, but still below this 92.80 zone. So I talked about this. I've talked about this previously and yesterday, that if it pushes a bit higher here, because it rebounded nicely from that 21-day EMA, if it pushes a little bit higher, but for example struggles to move back above this area, this 92.80 zone, maybe another slide could be possible, actually. So I need to see a nice, good, stronger move above this area in order to consider some higher levels. But even then, this is where my concern is, because again, this I'm wondering this whole pattern, how it will look, because it's so-called it could be the bearish 3 method, but again, that's a bit too early to talk about here. But again, let's see how this is going to play out. Like I said, I'll if, for example, the upcoming days here won't be able to, let's say, they will continue climbing higher, but still will remain the bodies of these forthcoming days, the candles of, I mean, the bodies of those candles of the forthcoming days will remain within the body of this one, the decline. Then maybe this could result into another decline. So again, let's this is the secondary option right now. For now, what I'm keeping an eye on is this barrier, the 92.80, and let's see how that's going to play out in relation to this hurdle. Gold, but for now, like I said, I'm kind of leaning a little bit more towards the upside on DXY. Gold pushing nicely to the upside. So yep, it's putting back its safe haven status. Again, we're seeing yep, some interest buying interest coming into gold. However, we're still trading below this downside line taken from the high of the 1st of June. So in other words, if we if we continue to trade below this downside line, still the trend remains to the downside. So that means that we could see a push higher, but if it struggles to overcome this area, another slide might be possible. WTI oil, and yeah, this one is drifting a little bit to the downside here right now. So again, for now, I would say I'm still sticking to the to this potential idea of maybe a possible descending triangle. However, it's not a really ideal one because again we're kind of having a bit of a gap here. So for now, basically, I'm gonna stick to this little hurdle right here. And if we clear this 65.11 territory, then yes, this will confirm a forthcoming lower low, and potentially more sellers could join in. Ethereum, so yeah, declined yesterday, but still remains above this upside line taken from the low, the 21st of July. Again, I would say that if it continues to trade above this upside line, then yes, there is still a chance for a move higher. If we get a break of this upside line, well, pretty straightforward. This could open the door towards lower levels, especially if the rate falls below that 21-day EMA as well. Currently, that 21-day EMA is near the this key support zone at 29.10 level. AUDNZD, so there we go, a nice good pop here to the upside. This morning we did get the RBA minutes from the previous from their previous meeting. So the minutes kind of stated the same thing, that there's still not planning to go with the interest rate hike here, and here, for example, for now, we're seeing the Australian dollar is strengthening. I mean, overall the tone is still kind of positive. However, there were comments that the central bank, the Australian central bank, expects Q3 to the Australian economy to decline a little bit. However, the projection for the 2022 is for around 4% overall growth, and 2023, I think it was around 2%, something like that. So you can have a read through the minutes on their website as well if you wish. But yeah, I mean, at the moment, I mean, as you can see that the traders, AUD traders, reacted positively here, but it's more of a kind of a bit of a weakness of the New Zealand dollar as well. If you take a look at some other pairs. So long story short, from the technical side, we broke the downside line. Now, basically, I'm leaning a little bit more towards the upside, especially if it continues to push through this 1.0514 level right here, which previously acted as a good area of support, then resistance, and now it's taking the role of resistance again, but let's see if we can stay above it. USDCAD, very quickly on that one. So yeah, the Canadian dollar is getting weaker. Of course, the WTI situation is, as you can see, it's deteriorating. So it's drifting lower. The price is drifting lower. So you can see the Canadian dollar weakening, and we can see that USDCAD is making its way higher, especially also that the fact that DXY is making a move to the upside. So all that is kind of pouring in and forcing this pair to move north. However, we're currently getting a hold up near this 200-day EMA, near this 1.2605 territory. If we clear that level, then yes, we will go for higher levels. We need to get rid of this upside line, no longer needed. So for now, keep your eyes on this barrier instead. For the downside, now previously I talked about this level, this 1.2423. I will still keep an eye on it because basically I would prefer maybe just to wait for, if it's for the downside, I would prefer to wait for a move lower here below this area, even though we could break this upside line. I mean, this could open the door towards lower levels, but yeah, I would prefer actually to stay to keep an eye on this barrier instead. US dollar against the South African rand. So this is something that I looked at previously. And for now, looking at this picture, I mean, you can see that, yes, it is pushing higher. We are making a way trying to push above that highest point of August. We did push today initially, however, we're currently getting a hold up near that already, I would say, previous highest point of August. And that's near the 14.9054 level, approximately around there. And yep, so if we clear that level and we go we stay above this, then yes, my next target is the highest point of July near the 14.9950 level, or we could overcome that and test the highest point of let me just double check. Yep, the no, sorry, not the highest point, but the high of the 26th of March, near the 15.0975 level, and then we will take it from there. So long story short, for now, guys, for now, let's keep an eye on this one, and let's see how all this is gonna evolve further. But at the moment, I'm a little bit more positive than negative. GBP Aussie pushing to the upside. So as you can see, this is what I said, that it's not really the strength of the Australian dollar here. It was more of a weakness of the New Zealand dollar, and here GBP Aussie, after rebounding from this key support zone near the 1.8762 territory, it's now pushing higher. Everything's working out according to this plan that I talked about previously, that if this area does do the job and pushes and provides support, then yes, a nice rebound could be possible, and we could aim for that 1.20, where's that? 1.8992, 93 level. For now, to be honest, it seems that I will have to redraw this level here. So probably yes, because I don't think that this will eventually, I mean, well, it could test it, but that could not be the kind of the key stopping point here. Probably one of the key stopping points here could be this, the high of the 12th of May of 2020, near the 1.89, sorry, 1. Is that correct? 1.9127. There we go. 1.9127. That's correct. That's the high of the 12th of May of 2020. That could be the next target. However, something for you to keep in mind, of course, is that let's see if we're not going to end up having a bit of a range here. So that's why I'm just going to drag this arrow up until here. Up until this level, and that's the 1.8972 mark, which is the highest point of July, and then we'll take it from there. Euro JPY, very quickly, you can see that yes, yen buying has been is now increased, so people are looking for safe havens, and the Japanese yen is one of those, and we're now near the lowest point of July. Yesterday we overcame that, but we stayed above it. Today we also overcame that level, but again we're staying above it. So this proves to be quite an important level here, this 128.60, which is the lowest point of July. If we clear that and stay below it, if the body of the daily candle stays below it, then yes, certainly the next target is the lowest point of March here of this year, near the 1.28.29. But if that gets cleared, certainly further declines are possible. And finally, EURUSD. So yeah, bit of a weakness here. However, a similar story as with the DXY, as I mentioned, that let's see if this is not going to end up being as a bullish 3 method. So basically the opposite of the DXY. Or maybe even a bullish flag. So again, at the moment, yes, I'm leaning a little bit more towards the downside, but if it drifts lower and stays above this, somewhere above this 1.1752 territory, yes, another move north may be possible. So keep that in mind, and this is where we could aim for that downside resistance line taken from the high of the 1st of June. So yeah, guys, that's kind of it for this session. I really hope you found it useful, and thank you very much for watching and listening. I really appreciate your views, your likes, your comments, guys. I really do. So thank you for that. And yeah, if you want to catch me tomorrow morning, as always, at my Traders Espresso, 6 o'clock GMT time. For now, have a wonderful trading day. Stay safe. Have your stop losses in place, and everything will be fine. So thank you very much, and bye-bye.